What's up, guys? Welcome back to Wall Street Wealthy. My name is SP Warren, and I'd like to welcome you to a very special episode of the Wall Street Wealthy podcast. This is our second episode, and we're doing something very interesting. This week, we brought along two guests. One who is new to trading and has only been trading for about 6 months. The second guest is actually a trading expert and manages over a seven-figure portfolio. Regardless if you're new to trading or you're a trading veteran, we'll have so much to learn from both our guests, and I'm sure the dynamic in the room will be very interesting. Thank you so much for tuning in, and welcome back to the second episode of the Wall Street Wealthy podcast. So, our first guest is an expert in computer science and has a background in computer engineering. And although he's a brilliant computer engineer, he's actually quite new to trading. I'll let him introduce himself. So, Ryan, would you please go ahead and introduce yourself?
Hi, my name is Ryan. I've been crypto trading for about 6 months now. I'm just trying to play the highs and lows and seeing where it leads me. It'll be
I,
interesting what I can bring to this, I guess.
I'm sure you'll add a lot of value to this podcast because, as someone who's new to trading, you have a completely different perspective than a seasoned investor. So, let's get started here. Ryan, would you please let us know how you got into trading and specifically how you got into cryptocurrency?
Yeah, so I actually got into crypto through some of my friends who had previously already been trading. Um, for me, I'd always known about cryptos and known that they were a thing, but I never really believed in them. And I always heard, hey, Bitcoin's at like $100 now. Bitcoin's at $1,000 now. And I always kept thinking, it's never going to go past it. It's just nothing that's going to happen. But eventually my friends they got into trading, and I started looking more into it and realized, it's not a bad way if you want to invest money and just focus on making and keeping it for the future. So I was able to get into trading at that point, but unfortunately, I got into trading right before the entire crypto market decided to halve, which yeah, that destroyed my portfolio right from the get-go. And honestly, it's been tough, but I've been slowly making my way back and just trying to make back to even and make some positive trades out here.
So, I know you've said you've only been trading for about 6 months, but in the beginning, the learning curve is very steep. So, if you could hop back in a time machine and go back and tell your previous self two pieces of advice, what would they be, and please explain why?
For me, I would definitely go back and tell myself that it doesn't matter how much you make or when you get in, as long as you're making profit. At the end of the day, profit is profit. You don't have to try to jump into everything because you're scared of missing out on profits or jumping out as fast as you can because you're scared of losing profits. And it's a lot of it is patience and just listening to yourself. Throughout trading, it's always about time. A big thing for me when I first started was I kept looking at charts and then breaking the candlesticks down into smaller and smaller time increments because I always wanted to find the exact perfect time to enter, exit. And a lot of it I found out is the longer you plan on holding stock for, the larger the candle size you should use, of course. And there's a point where breaking it down any smaller just isn't worth it because at the end of the day, it's not going to actually change how you're trading. It's all about making profit, not about making the absolute max possible at the highest high and the lowest low. It's just not going to happen.
That's actually two wonderful pieces of advice. I think it's even important for experienced traders to know. The first one being, it does not matter how much money you make as long as you're still making money. And the second one being, it's all about time. And when in doubt, zoom out and look at the bigger graph of the bigger macro trend. So these are actually two wonderful pieces of advice, and I wanted to get a better sense of how you learned your lessons while trading. So, reflecting back on the past 6 months, do you have a specific story you'd like to share? Maybe about when you made an impulse decision, or maybe when you entered too early or exited too late?
So for me, of course, the biggest trade that I'll always bring myself back to is when Bitcoin halved. And at that point, I was just getting into trading and I was looking at all the charts and everything, looking at how the market was doing. And I basically told myself, well, everything's doing so well, there's no way that it'll go down from here. And I want to make profits with everyone else. So without really focusing too much on any indicators, focusing on much technical analysis, I said, I don't want to get left out of making profits. And that's when I jumped right into it. But once I started seeing it go down, I kept just sticking to myself that, hey, I thought I don't want to lose the profits. I don't know how low it's going to go. So I'll just hold on for a while. And that ended up pretty bad for me as it just kept going down and I couldn't see the reversal in the market. So a big thing for me is just noticing long-term patterns, even if you're going to short-term trading. A lot of times they'll tell you whether or not you should be holding through a dip or selling and taking your loss.
So I know earlier you mentioned to me that recently you started teaching yourself technical analysis, and I know you've only been doing it for a few months, but how does a beginner start to learn technical analysis? And do you have any tips or tricks that you now know that you would advise someone who's just starting out?
When I started teaching myself, I had absolutely no idea what I was doing. It was at that point where I said, hey, I'm looking at a bunch of charts that I don't know what anything on this chart means. So I just started Googling every little aspect of it, wanting to learn what every little part meant and every little thing. And that eventually led me to different YouTube channels where they would just teach you the very basics of stocks and trading and how it all works. And I just kept watching new videos, trying to figure out more and more about different patterns and different ways things work until I was able to make profitable trades.
I'm actually really happy you mentioned that because I know YouTube is a fantastic resource to get started. But when I was getting started, what I noticed is that most videos actually only offer about 10 to 20% of what we actually have to know. And then later, they ask you to join a paid subscription program to learn even more. And I realized that starting out, many of us investors and traders cannot afford these paid subscription plans, and also many of them are just pure outright scams. So starting next week, keep an eye out for Wall Street Wealthy's Fundamental Analysis 101, where we cover every single technical analysis indicator you need to know in depth for free. So getting back on track to the podcast here, I wanted to ask you, Ryan, do you think it's smart for a beginner to invest in the cryptocurrency hype? By that I mean join the herd mentality of coins like Dogecoin and SafeMoon, which actually lack fundamental value but are able to outperform any technical market indices.
So that's a hard question because you can never truly tell with shitcoins if they're going to moon or if they're going to crash. And one of the biggest things about that is just because the market caps on most coins like that are small enough that one whale could easily influence whether it's going to tank or moon. And a big problem with that for me is focusing on how far you think the coin will actually go. In a lot of cases, someone will start seeing a coin like Doge mooning, and they'll immediately say, well, I want to get in on this. I can make money too. Look at how much money other people are making. So let me jump in now so I can make money with them. And a lot of times people end up doing this, but they end up buying at the peaks. And after that, it just crashes because a lot of thing about coins and cryptocurrencies that don't seem like they have a future is that they don't. And slowly over time, that peak is just going to keep going down and down and down. And in most cases, it's not recoverable.
So with that being said, do you think the lessons you learned help you steer clear of tokens without pure fundamental value, or would you say you still get attracted by high APRs and invest in these meme tokens with a lot of hype?
I mainly stick to tokens with stronger fundamentals and a larger market cap, but a lot of times I will put small amounts into these coins that I think have a good future. If I look into a dev team and see that they're really dedicated to the coin, or I see their updated roadmaps and I see how much they're planning to do in the future, even with a high APR, it's very possible to definitely leave a little bit of money in for either a long period of time or even just putting it in for a few days, making that percentage and getting out as fast as you can with your profits.
That's very interesting, actually, and it kind of leads me into my next question. You mentioned that you like to get in and out of trades quickly, sometimes to capitalize on these high APR yield farms. So I wanted to ask you, on an average week, how many trades do you think you make, and how many trades do you think are ideal to make?
Maybe 4 or 5 trades. A lot of times I'm looking to hold my trades for more than a day. And because of this, I'll buy at a low point and wait for a couple days just to see where the market goes from there, wait for it to reach a higher peak. So I'm not really looking to do a lot of quick trades for short profits. I'm looking for a little bit longer, but I would like to get to the point where I'm looking at enough coins and I'm looking at enough different markets that I could make at least one trade a day that I'm very confident in. But right now, I just have too limited of a trading pool and too limited knowledge to be able to confidently go into that.
Yeah, and I think it's really important to stress the fact that it's not important how many trades you make. What's important is how profitable each trade you make is. And I've seen this time and time again with several of my friends and also myself when trading that a lower quantity of higher quality trades will far outperform a higher quantity of low quality trades. Because when you have a higher quantity of low quality trades, you become far more emotional, and that's when you lose the most amount of money. So, this brings me to the conclusion segment for today's podcast. And the final question I have for you is What cryptocurrency do you think is the best investment for the next 5 years? What can you safely advise friends and family to buy as a safe hodl and the most profitable cryptocurrency to be holding over the next couple years?
Right. For me, the answer has to be Cardano.
I
Um,
knew it.
yeah, it's just such a great coin. It has incredibly fast transaction times. It has a large market cap. It has a huge fan base constantly backing it. And it has a very public dev team who are always trying to create bigger and more uses for it. And just listening to the news, listening to everything that's happening, I think Cardano might pass Bitcoin and even Ethereum in the near future, especially over the next 5 years.
I certainly agree with you. And when you say past Bitcoin and Ethereum, I'm going to go out on a limb here and assume that you mean Cardano will outperform Bitcoin and Ethereum. Since Cardano has such a large supply compared to Bitcoin, it's very hard for it to beat Bitcoin's price. But I completely agree with you that I'd recommend Cardano to any single investor trying to get into cryptocurrency because as of right now, Cardano has become so much more than a crypto. For example, in countries like Ethiopia, Cardano has listed cows on the blockchain as NFTs for proof of ownership because in those countries they had problems with landlords coming in and taking cows and cattle from poor farmers who could not afford to pay rent.
I heard about that. I heard that they were having problems because people could literally just walk onto your farm, brand a cow, and walk off, and there wasn't enough like evidence to be able to say, "Hey, that's actually mine. You can't do that." And it was becoming a huge problem for these poor farmers. So I heard the Cardano team created NFTs, which completely can't be faked or can't be replicated. So these people could claim that they actually did own this property and it was theirs. And I think that technology just will be able to like eventually own houses as NFTs one day, maybe.
Yeah, definitely. They're calling this movement the Internet of Things, and it's actually Cardano and Ethereum that are actually pioneering this movement. So I'm really happy that we got to touch on that topic today. So time is quickly running out, but I wanted to ask you if you have any final words of wisdom to share with our audience. Do you have any final thoughts you'd like to say?
If there's one tip I could tell new traders, it would be just not to give up. The first few hundred, maybe even thousand times you trade, you're not gonna be the best at it. But if you keep persevering through it and you keep learning more and more as you go, eventually you will start making profits and you might even start to like it.
I couldn't have said that better myself, man. Thank you so much for being here today.
Thank you so much for having me on the podcast. It was great being here for this conversation. I think I learned a lot and hope I was able to give good advice to the community.
So, once again, everyone, this week's guest was Ryan Marks. Although Ryan is new to trading and has only been trading for about 6 months, Ryan has experience as an engineer working for companies like Zero UI and HANA Technologies. So, this wraps it up for episode 2, part 1. But as mentioned in the beginning of this podcast, this week we had the pleasure and opportunity to interview two different traders. One, Ryan, who we just spoke with now, who is new to trading, and the next guest is actually a seasoned veteran. So make sure to click on part 2 to continue this podcast. So thank you so much for tuning in to episode 2, part 1 of the Wall Street Wealthy podcast. I hope to see you on part 2, and I'll see you next time on Wall Street Wealthy.